Let us take this illustration. Pass journal entries for the following transaction to understand what we have discussed about trade discount and cash discount. The first transaction says bought goods from Mohan of the list price of rupees 10,000 at 15% trade discount. This is a transaction bought. This is the first transaction bought goods from Mohan of the list price of rupees 10,000 at 15% trade discount. So first of all, we can say that this is a credit transaction because cash is not mentioned anywhere, right? So in this transaction is a credit transaction. It is not a cash transaction. Bought goods from Mohan. So business is purchasing goods from Mohan. Two accounts are involved. Bought goods, that is purchase account is involved, and Mohan, another account is involved, is Mohan. So purchase is a nature of purchase account is a nominal account, and purchase is a expenses for the business. So it, and the rule of nominal account is debit all expenses and losses, credit all incomes and gains. So here purchase is the expenses, so it should be debited. So it should be debited. Mohan. Mohan is a personal account. He is a supplier of goods. Personal account rule is debit the receiver, credit the giver. Now Mohan is a, right now he is a giving position. He is a giver of goods to the business. So he is a giver. So he should be, his account should be credited, right? Now we can calculate it because list price is given and trade discount of 15% is given. So the purchasing price we will calculate in this way. List price is 10,000. List price is given 10,000 less trade discount, 15%. 15% of the 10,000 is 1500. This bracket is showing as a negative amount, right? So we deduct 1500 from 10,000, the remaining is 8,500. This is my purchasing price, right? So the journal entry will be purchase account debited to Mohan account. This is purchase account debited to Mohan account, and we will write the narration. Goods of the list price of rupees 10,000 bought at 15% trade discount. Debit column you will write 8,500, in credit column you will write 8,500. Now take a second transaction. Second transaction is settle the account of Mohan. This is second transaction. Settle the account of Mohan by paying cash under a discount of 4%. So this is a transaction. First transaction was you have purchased goods from Mohan on credit, means you haven't made payment to him. In second transaction you are making payment to him and you are also receiving discount. So this is a transaction. Settle the account of Mohan by paying cash under a discount of 4%. If you look at this transaction, it combines two transactions. Two transaction is what? One is Mohan is receiving cash. Mohan is receiving cash. And the same time Mohan allows discount, or you can say discount received from Mohan. So two things are happening simultaneously. So either we can pass separate journal entry for making payment to Mohan and receiving discount from Mohan. There are two transactions, but they are happening simultaneously. So Mohan is a common between making payment payment of cash to Mohan and receiving discount from Mohan. So I have, for your understanding, I have explained here one by one The first transaction is Mohan receives cash, and before doing this, I have also shown the calculation. Mohan was supposed to be paid 8,500. So amount to be paid to Mohan is 8,500 and he is allowing 4% discount. So 4% we have calculated out of 8,500, it is 340. So we will deduct it from 8,500 and the remaining amount will be 8,160, which is the actual cash to be paid to Mohan, right? So for your understanding, I have explained here one by one. First transaction is Mohan receiving cash, and what he is receiving is 8,160. I have written here. So Mohan is a personal account. He is the receiver. Personal account rule is debit the receiver, credit the giver. So his account should be debited. Cash. Cash is a real account and it is going out from the business. So it should be credited. So journal entry will be Mohan debited to cash. Right. The second part of the transaction is Mohan allows discount, or you can say discount received from Mohan. Discount received from Mohan. Discount received from Mohan. So two accounts are involved, discount received and Mohan. Discount received is a nominal account. It is an income. So nominal rule of nominal account is debit all expenses, credit all income. So discount received should be credited. Mohan. Mohan is a personal account and right now what he is receiving, he's because he is allowing discount, so he is actually receiving loss for whatever the discount he is allowing to us. It is loss for him, so he is what he is actually receiving from the business is loss, so he's the receiver of loss, so he should be debited, right? So the journal entry will be Mohan debited to discount received, right? So in the journal entry, Mohan debited to cash account, Mohan debited to discount received, Mohan account is common. So we can pass a compound journal entry. This could be the compound journal entry. Mohan debited with Mohan was debited with 8160 and 340. We combined it. Total is 8500. Actually, Mohan was supposed to receive 8500 if he was credited at the time of purchase. Then if you are settling his account, means he should be debited with 8500. After debiting this Mohan account here, no, Mohan is no more relevant for the business. Mohan will be totally um, totally extinct from the book of account after this transaction. So Mohan's account is settled. As I have shown, Mohan was debited with 8160 for receiving cash and 340 for receiving loss. So total Mohan account was debited with 8500, which is nothing but the actual amount he has to receive, and to cash is going out from the business is 8160, and the same time we are having a income in the form of discount, that is 340. So the compound journal entry is Mohan debited to cash account to discount received. It is shown in here. This Mohan 8500, cash 8160, and to discount received 340, and in this way. So because see, apart from this, you also can observe after two journal entries, because this page is all completed, so we will add it, the debit amount and credit amount 17,000 17,000, and we will write CF, that is carried forward. In next page you will write, first you brought forward those amount 17,000 in amount column, then we will proceed for the next transaction. So next transaction is bought goods for cash of the list price of rupees 50,000. Next transaction is bought goods for cash of the list price of rupees 50,000 at 20% trade discount and 5% cash discount. So first of we will calculate it. List price is given 50,000 less trade discount. Trade discount is allowed 20%. We will deduct 20% of 50,000, that is 10,000, and the remaining is 40,000. This is my purchase price. So out of this purchase price we are also receiving cash discount of 5%. So 5% is also deducted, that is 2,000, and the amount remaining is 38,000. So this 38,000 is actual cash paid to the supplier. So in this transaction, how we will what are the accounts are involved? We will see purchase account is involved, purchase in involved, cash is involved, and discount received is involved. Three accounts are involved. So purchase account, purchase is a nominal account. It is a expenses for the business. It is a expense for the business, so it should be debited. Cash is a real account. It is going out from the business. Whenever you are purchasing goods means you are making payment, so cash is going out from the business, so it should be credited. Discount received, it's a nominal account. Debit all expenses, credit all income. This when you are receiving discount, it's an income for the business, so it should be credited. So combined or compound journal entry is purchase account debited with 40,000, cash is going out 38,000, and cash discount received is 20,000. So goods we have purchased is an expense and the amount of goods is 40,000, and for that we have paid only 38,000. 2,000 we have received as a discount. This is the settlement of the goods purchased. Now the last transaction is sold goods for cash of the list price of rupees 20,000 at 10% trade discount and 3% cash discount. So this is cash transaction. We are selling goods for cash of the list price of rupees 20,000 at 10% trade discount and 3% cash discount. So three accounts are involved: sales, cash, and discount allowed. We are selling goods, so definitely the cash discount we are allowing. So sales is a nominal account. Sales is a nominal account, and it is a income, so it should be credited. Cash is a real account. We are receiving cash from the customer, so the cash is coming into the business, so it should be debited. Discount here we are allowing discount to the customer, so it is a discount allowed. Discount allowed is also a nominal account. Rule for nominal account is debit all expenses, credit all income. So discount allowed is a loss or expense for the business, so it should be debited. And I have also shown the calculation. List price is given 20,000, then we deduct the trade discount, that is 10%, 2,000. Remaining amount 18,000 is a selling price. Then selling price is 18,000. We are allowing 3% trade discount. 3% of the 18,000 is 540, so we will deduct it. Bracket shows negative balance, right? Negative amount. So the amount left is remaining is 17,460. This is the actual amount we are receiving from my customer. So cash is coming to the business, so it should be debited with 17,460. Discount allowed is an expense, it is debited for 540, and the total income was 18,000. So sales, the goods we have sold of 18,000. So this is all about the question, and it has been shown like this. This is the last journal entry they have made, the earlier one, right? So thank you class, and I am giving you one question to solve. This is the question what we have discussed. So I will send you this question and you will solve it in your class source. If you have any query, you can ask me.